In this video, we will cover negative risk to reward trading. We will show my last results of trading with a negative risk to reward ratio for the last 30 days, scalping and swing trading crypto. I am usually trading Forex and indices, but I decided for this year I would like to focus on crypto. And with crypto, you really need to go with small position sizes until you figure out what's the proper position size to use, because you will get your ass clapped with no lube. Anyways, so let's talk about my results of day trading and kind of swing trading for the last 30 days and the crypto markets. This is my equity curve, and this is actually not the entire thing, because I was initially trading with a brokerage that I no longer use because they did something that really sussed me out, and I was like, I might just take my money out, and I went to a new broker. So this is what I did. 160, not a lot of money, right? Nothing to scoff at, but the thing that you really want to pay attention to is the equity curve, and how it's just kind of up and to the right. I wish I had more stats, but this broker didn't connect with anything that would give me like a trader sync or something like that give you like a lot more details, like your average return, your win rate, and something else. It's like three major things that you really need to focus on with a negative risk to reward ratio. Didn't have that, so I'm just kind of like looking at the equity curve. Basically, equity curve decent. Let's look at the other broker that I switched to. I'm on Blowfin now. I could talk about that because they seem legit, so I'm gonna actually say it. I'm with Blowfin now, and if you want to trade with them, link in the description, help a homie out. But this is my win rate. Crazy, honestly. I'm kind of blue. I'm like, is this right? Like 89%. It's fucking crazy, bro. But I opened 83 positions, or I don't think I've taken 83 trades, but I think that's like, maybe that's the number of, orders I have, which, I mean, would make sense. It says orders, right? So the actual amount of trades I took, I'm not quite sure, maybe 25 or so, but this is like, because I'm like scalping and doing a bit of day trading, I'm just like scaling out of the positions instead of having a very static risk to reward ratio. So like risking one to make 0.5, I have one that flows with the market so that I can get a higher return with the negative risk to reward ratio, to push it to the point where it goes beyond even a 1-to-1. I'll hold the trade for as long as it makes sense to hold the trade for. I'm not like trying to get in and out of the market, like I am, but I'm also flowing with the market to maximize my return, and that's the best way to do it, quite honestly. You can go for a static one, but your upside is always capped, and you never really want to cap your upside when you're trading. You always want to make sure you squeeze the shit out of every trade that is a winner. And that might sound crazy to some people, but if you don't manage your risk properly and capitalize on how much money that you make and how much money the market is willing to give you, you're gonna fuck yourself over. So I did pretty decent managing my risk on here. So decent stat, and this is the current equity curve over there. I'm not sure it's like a straight line like that. Maybe just catching the time that I wasn't trading, but I don't know why it wouldn't just start like right here. But anyway, so it popped. I took a loss because I was still working with I was still figuring out the position size. I was working with the position size I was using on the other broker, and then now you can see the equity curve is kind of up into the right price action. I was usually working with around like 10 SOL. I was basically just scalping SOL, so I was working with 10 SOL, but I'm like gonna be pushing it higher now so I can trade with like 100 SOL and stuff. I've been trying to figure out the position sizes. It's nothing like NASDAQ or gold or anything, so it's completely different. But this is going to be, first I was talking about the results of the strategy, right? Like, that's, people should show you the results of the strategy anytime they talk about a strategy. So you've seen the results. What is the strategy? It's literally just price action, usually break and retest, maybe sometimes supply and demand. If you don't know what you want to do, just stick with one fucking strategy. Only trade when it appears. Be disciplined. If you're not disciplined, you're going to lose your fucking money and you're going to be mad at yourself. And you're going to go through a whole range of emotions that you just don't need to experience. All you need to do is trade your strategy when it appears and only when it appears. That's what makes you profitable. That's what makes you different from everyone else. You think taking more trades is the key. In some cases, it is the key, but only if your strategy, if your setup appears. If it doesn't appear, then no, you're not, because you're just trading whatever the fuck you see. Okay, now that we got that established, for the undisciplined minds, it's literally just a break and retest. The market on Solana right now is selling off, just shitting the bed. Okay, and in fact, we can just go look at the trade that I took yesterday. So the market is selling off. This is already a bad idea. I'm telling you now. This is exactly how I fucked up when I was doing my back testing. But this is where skill meets experience, right? I know this is a downtrend, but the confluence on the other time frames gave me the idea to take this trade, even though it's below the 200 moving average. This is clearly a downtrend, and yet somehow I still made money. Okay, so this is a downtrend. Why did I take this trade? Well, just looking at the price action, if you were to take the path tool, you see that we made a high, a lower low, a lower high, a lower low, a lower high, a lower low, a higher high, because this high is higher than this high, and it pulled back and made an enormous, very horny, bullish engulfing candle off that level, and the trend reversed from there. So what did I do? You can't really see it because it's the 5-minute time frame. So but I think I took it like on the break of these highs, and I scaled in. There should be 2 entries here. Maybe it was in this candle, but bullish engulfing candle. And I got in on the, ideally you would get on the retracement and the retest of the level, and maybe like front run it a bit, because sometimes, just like this candle right here, it was super bullish, never came all the way down to retest the level, it just went straight up. So I think I'm gonna go see if I recorded this, because I think I did record this trade, but I got in basically as close to the level as possible, and my invalidation is usually no more than $3.50 on SOL. Which is, if you're working with 10 SOL, that's like $35. If you're working with 100 SOL, that's $350. So this is the type of stuff that you need to work out ahead of time. And this is why when you're trading, you gotta trade small, because you don't know exactly how much you're going to lose, because you don't know where your invalidation is going to be. Most people try to trade in a way where they try to get their stop loss as close as possible to the market. Now, there's nothing wrong with that if you're looking for that return. And in this specific case, it worked out. If you were just looking to take it up to this resistance level, you would have got a 1 to 1.5. Excellent return. At least to me, for that return for some people is not worth it. I think it is. But anyways, and we'll talk about why this is a problem when I show you the next one. But there's nothing wrong with this. You can go for that. The reason why I don't do that is because the market just made a higher high than this high, and the market could do what it wants to do and retrace 80% of the way here, and it'll still make a higher high than this, a higher low than this low. So the market could do this. It could bounce off of here, retest this as resistance, come all the way down to the 786 and even over here, and then come back up, and then even break structure here and continue to move up. It happens, and I'll show you an example of it. So I choose to use the point of where my trade is invalid, and that means I'm going to have a negative risk to reward ratio. Not a problem for me. So my invalidation was about $3.02 on SOL. So it was way down here. I entered, I saw strength coming in. I placed limit orders. It tagged it. I saw weakness here at this level. I scaled out. Boom, boom, boom. Double top on the 5-minute. It broke. Guess what? You could have took the sales too right here. Same strategy, exact same strategy. All it is, break, retest based off of microstructure, because I know that if the market is strong enough, especially on this candle, like you just ape this shit at this point. This candle, you just ape it. Come on. But it hit resistance, created support, double bottom, very bullish, broke that, retested it. This is a candle combination here. I'm forgetting the name of it, but it's really bearish or bullish in the context of a bull. You could have sold this right here, like, hey, I haven't really short. So this is not usually how my thing look. I kind of like muted colors for this. Let me just fix this real quick. But you could have sold this stop above the high. You would have decent stop loss too, because this is your invalidation right here, this high right here. So you would have a decent stop loss too. And guess what? This is still a negative risk reward ratio. This is a 0.79, but it was profitable. So it's a high probability setup. So break, retest, and ideally you would get in with a limit order right here. As soon as this breaks, you get in with a limit order right there. And the limit order is a small limit order because although it is a high probability and you want to sell on the retest because you want to get the best price, there's no confirmation that the price will like come over here and just break straight through this and then maybe come down or something like that. Like confirmations, let's talk about what a confirmation is in the first place. So you did not have confirmation that this was a break and retest until this candle right here. So trading without confirmation means that you are trading with no confirmation that the trade is 100% valid. And there's nothing wrong with that because uncertainty in the market creates opportunity. So you can, right here, the bulls do not know that the market is not going to recover until this bar, which is the confirmation that the market won't recover because it just retested support as resistance. So because you have confirmation now, you have a lower R multiple. Before, if you would have placed a limit order here, there was no this candle did not exist. I hope I'm like, if I'm not explaining this properly, I'll make another video on it because it can be a bit of a hard concept to understand. But this right here is what you're seeing. And the market, look, this is almost a bullish engulfing candle right here. This is almost a bullish engulfing candle. So the market could have recovered and got back above it. So you're preemptively selling before there's any confirmation that the market cannot get back above that level. So you're selling into strength, assuming that the market will not recover and it's going to give you a better R multiple, but you have to position size smaller because you're trading without confirmation. So you're trying to say that I want to receive more reward on this entry, but maybe my position size is a little bit smaller. So this is how you scale in. You would sell the retest. So you would have sold here. Hopefully you got filled. You would have got filled here. So you would have sold here. Then there's confirmation that the market cannot recover. So once you sell the bottom of this bar, your average is going to come down to like right here. And if you wanted to, you could lower your stop loss. Now, if your stop loss is here and you lower it to here, that's not a really big deal because ideally this high, this would be the high that's the first attempt that the market chooses to stop the price from going higher. And this would be the second one. And your stop loss would be over here. So now this ends up being it'll probably still end up being a negative risk to reward ratio if you start to TP early, which would be about where the first sign of trouble could occur, which quite honestly is about here because the market made this swing low here and pushed higher. So your first TP most likely would have been right here. If you're a scalper, at least you could hold until it gets all the way there. But once again, we're talking about things that you have no certainty of. So you preemptively take profit here. And then guess what? The market did a break and retest and you could have sold this again on this confirmation high right here. But anyways, you sell here and you TP here. All these are the same strategy and you're literally just flowing with the market. It's the simplest strategy. And I really love the Bruce Lee quote in this circumstances because it really is. I fear not the man who practiced 10,000 different kicks, It's the person who've practiced that one kick 10,000 times. So if you practice break and retest, and I think I butchered that quote, so put the actual quote in the comments. But if you practice one strategy 10,000 times, you're gonna become a fucking monster on the charts. Every time you see that strategy, every time you see that setup, you're gonna shoot it without hesitation. You're not gonna worry about losing money. You're not gonna be worried about if the trade works out or not. You're just gonna shoot it because you've done this 10,000 times already. And I've back tested, about 1,000 times now. So I've taken these setups and it shows in my equity curve. It shows in my ability to make it happen in the markets. All right, so same strategy. Once again, break, retest. So the market created a swing high that was support here. You see that exhaustion on this candle? That's the market attempting to form support. So it attempted to form support here. Bullish engulfing candle, inside bar, right? This is an inside bar now. So it's showing that buyers are present, and this demand candle that was just created, rejection. That's your confirmation to enter your long position on this break and retest. This was at 4 p.m. I wasn't at the computer. I was at the computer at 6 p.m. because sometimes I trade it in the evenings. So bullish engulfing candle with an exhaustion candle, inside bar. Your first entry would have been buying the dip on this candle right here. Why? It's the exact same setup that I showed you previously. Exactly the same. There's nothing different about it. It's still higher time frame bearish. You're below the 200 period moving average, and yet guess what? You took buys and you made money. So limit order on the retest of here. Stop loss below the swing low. In this case, it is $2.30. That's brilliant. It's better than $3, right? So you get in with a limit order here. Boom, you're tagged in. You see exhaustion at this level, specifically at this level with a bullish engulfing candle. Exhaustion. You scale in. You have to shoot it again. Don't be afraid of losing the trade. You have a high win rate. Shoot it. Okay? Shoot the shot. Enter again. So your average, probably about right here. You scale out at the first sign of trouble, which honestly, I probably would not have taken this 0.3 because this is way too close to entry. I would have taken it right here. And guess what? It hit this level again and pulled back. So once again, the market reacts to these levels. So it hit this level, pulled back, bearish engulfing candle, and then we had an inside bar, and then we pushed up higher. So first TP probably would have been here in the supply zone. What is that? 0.55. No problem. So I show up to the market. I see a break and retest. I'm in those buys. I'm in. And it doesn't look like I took profit here. I'm not sure why. Honestly, I'll have to go see if I recorded it, but you probably should have been taking profit here. I didn't take profit. Maybe I saw something on the higher time frame, which made me want to not take profit there. But guess what? I saw the price moving up. I scaled in. We're going to talk about your position size when you're scaling in too, because that's really important. If you bought 10 SOL down here, you don't want to buy 10 SOL up here, because now if you buy on the top of this bar, your average is way up here. Now it's fine if you think the market is going to go way higher. That's fine. But if you bought 10 SOL right here, you have to scale in if it comes back down here and it rejects this level, which is why my stop loss is so wide, and which is why my starting positions are I have two different position sizes. So sometimes some stuff like this will happen where the market will bounce off this level, retrace, and come back to retest this level, hit this level as resistance, retrace, go up, do some shit like this. Now you just got in at a better price. So I do have different position sizes for multiple situations. So anyways, I scaled in here. I bought 10 here. I probably bought like 5 right here. and then I started to clip it as it sold into strength. We hit the 200 period moving average. I clipped again. We failed to hold this level. I clipped again, and I think I was done. That's it. And guess what? It came back to bounce off this level again to move on up. So that's pretty much the strategy. I definitely think that you need to practice it before you get it, and knowing when to size in and when not to. But that's just kind of like a quick run and gun version of the strategy. Guess what? It's here again, right here. It's the same strategy, break and retest, and it works bearishly too. But look, break, retest. Guess what? Went up. Where's your stop loss? Below the low, $1.50. Not a big deal. Guess what? Performed very well. Stopped over here. So try this for yourself. Let me know what you think. I'm probably gonna end up making another one because there are so many different things that you need to be aware of in the markets that it's hard to cover in one video, and I don't want to make this one too long. But in short, break and retest is the way. If you enjoyed this content, hit the subscribe, comment, like, follow me on Twitter, join the free Discord. I'm dropping free game in there. People are sleeping. I'm dropping hitters in there and people are sleeping on it, but hey, people don't want to make money. That's okay. I'm gonna see y'all in the next one. Peace.